many sights to see. And when I look in my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Thursday, the 29th day of April, and this is the Daily Report. Gold is trading higher today, 1167.18. It has traded above 1170 and is currently a very quiet day. I do have a theory behind it, and it's going to be encompassing not only Fibonacci and candlesticks, but today we're going to talk a little bit about Elliott Wave. Therefore, you probably see these numbers or waves. We'll speak about that in a second. Now, Elliott Wave does tie in with Fibonacci retracement, which is why it is something that I follow very, very closely. It was created initially by a gentleman named Ralph Nelson Elliott. He lived from 1871 till 1948. He came up with this idea in the 30s. Basically, what he attempted to explain was that there was a rhythmic pattern within nature, and because we as humans are part of nature, that we're going to follow those patterns. The second point is that there's a collective investor psychology that will move from optimism to pessimism, bullish to bearish, and back, or the other way around. It's composed of 5 waves and then 3 waves. Now, when you have a major trend, as we saw in the gold market, as it reached its record tops at 1221 back here, what will happen is their very, very first wave, as it enters into a bear swing or it changes from a bullish perspective to a bearish perspective, is called the first wave or wave 1. And that's this wave here, from here to here. Your corrective waves are always going to be waves 2 and 4 against the trend. So you have wave 1 down, wave 2 is your corrective wave, and then we continue to the trend. That's going to be your third wave here, and then you have your final corrective wave here, and then you have wave number 5. Now, how does that all tie into what we're looking at and the fact that I'm extremely bullish on the market? Let me go over a couple of points with Elliott Wave. First of all, your most powerful wave is typically going to be your third wave, this wave here. And as you can see, this third wave was absolutely on this run to the downside, was our absolute low. The next thing that you want to look at is wave 5 is considered the final wave or the final leg of that dominant trend, and this is when the shift begins. In other words, you get this large wave down, this final corrective wave. When you get to 5, this signals your bottom. Your bottom is going to be signaled right in here as you go to wave 5. That is, according to Elliott Wave, the end of that current trend, and you're going to see the shift in momentum. So that what you really want to look at is that wave A is really where it begins to, the transfer happens from bearish, in this case, to bullish. So you have now your bull wave up, and then wave B becomes your corrective wave, and then C becomes your wave in the direction of the market, right in here. So traders, what are we witnessing here? I think we're looking at a classic pattern within the Elliott Wave. What I'm going to do is show you how that correlates, of course, to Fibonacci, and then let you know where we think the market is going. Now let's try to put this all together for you. I've kind of shrunk the chart, and I've put up our Fibonacci retracement area. Again, traders, I draw it from this low back in September. The reason I use that, this was the final set of lows before it broke 1,000 on that third attempt, and then actually went to the record top. So this is the most bullish part of this dominant cycle, and this top. When I do that, I create my 0%, 100%, and then our relationships all the way down. Now, let's look at something kind of interesting. The one area that I've been talking about, 1167 to 1168, is right in here. We have had our 38% level right in here. And if you're going to notice something interesting, when you look at Elliott wave, what your C wave is that's when supposedly volume picks up and people actually begin to realize that the bull market's here. That's going to be right in this point here. And because they are both working off of sequences in nature and they're working off of very similar ideas, you're going to find that you're getting this breakout. Again, this one critical area that we're looking at is to effectively begin to get our closes above 1167, 1168. And you also see that is the area right now where we are finding a little bit of resistance and stalling. So in terms of a long-term view of the market, here's my sentiment. Once we're able to form a base above this retracement area at 23%, and the fact that what we're witnessing is this C wave, this final wave, is the wave when most people start to realize that the overall trend has changed. And in fact, we've got these two things happening at the same time. My sentiment is as follows. If we can see the market trade above this particular area here, this is our critical area, form a base in this area, I believe we are going to witness another extreme bull run. Then we'll go into a series of waves the other way, and we'll look at Fibonacci. We'll always be looking at our candlesticks. The only thing that concerns me overall is that over the last couple of days we have had these doji-like candles. The doji-like candles are consolidating candles. They can absolutely point to shifts in the market, and you'll see them happen quite frequently. It's what we've traded off of before. We had this doji here, another doji here. We have this inverted hammer here. We've got two dojis here, a shooting star here, and a shooting star here. So that you can see at each point in the market, almost you saw that shift of power or consolidation. This is a real critical area. That's what I'm trying to point out. Long term, I am bullish. Are we going to see the market pull back? My personal sentiment is I do not think so. However, what the market is showing me is that it's having difficulty moving above that area. Now, that is typical of markets that will break out and run also, so that we are at a critical junction. I'm bullish. We're in a position, of course, we are long at 1156. I'm going to talk to you about raising that stop at the end of this broadcast. But I think that once you see the scenario as we're looking at it today, it has formed a classic pattern, not only following Fibonacci, but Elliott wave, and the candlesticks have kind of shown us the pivot points. When you put those three things together, I think you have a sound technical basis to look at a long-term plan in the market. Okay, traders, here is my recommendation. Obviously, maintain our long position at 1156. However, I am recommending at this point that we trail our stop up, and my trail point is going to be 1140. 1140, it's still a very loose stop, puts us roughly right in this area. Here's what I'm looking at. I want to keep us below the lows in this area. Our stop already was down in this area here to protect us, so I am going to move it up about $20. But with the types of swings that you get in the market, we could easily see the market, let's say, continue up, have a sell-off, of course, and then begin to move back to the upside. And we certainly don't want to be stopped out if, in fact, the market is going to continue higher. The critical point that I do want to look at right now is how it reacts at 1167, 1168, because what we really need to see technically is we need to form a base above this 23% retracement level. Right now, what we're witnessing is what I called yesterday. This is that scouting party. What is happening is the bulls are moving into the market. They are testing the fortitude of the sellers, and every time we get to that point, the sellers are able to pull profits, and it is not formed a beachhead yet. A beachhead is simply that shift where where resistance becomes support. Once we witness that and form a good base, if we're still on an uptrend, I'm going to look to scale and add positions to our current long position. If I see activity that's indicative that the market wants to retrace and move back, such as we've seen in this area right in here, or in this area or here, I will either take our stop to the market or trail it up tight enough where we can pull some profits. Right now we're only sitting with about $11 on the trade. My sentiment is if the market does break out, I do believe it's going to test initially 1180 to 1185. This has been Gary Wagner with your daily market update for Forex Gold, and wishing you, as always, good trading. Bye-bye. We'll talk to you on Friday for the weekend review.